Hello and welcome to another episode of Stock Shots. Please remember, I am not a financial advisor. I'm just giving my opinion based on some things I see, like support and resistance, supply, demand, and of course, some indicators that may be on the screen. So always do your own due diligence. Make sure you educate yourself and always look to the left because we're looking at things that have already happened to think about what things may do in the future. So this is another episode of Stock Shots. Welcome.
All right, here we go. Sorry about last week. I had some technical difficulties. I was supposed to make some come up videos, but then life happened all week. I got extremely busy with work, and we had a storm here where I live, so I had to do some work on the house because of the storm. But here we are. We are now with the S Fund. So if you're looking to get back in the S Fund, for me, I'm just going to be honest with you. We have something we need to do first before I get back into the S Fund, and that is break the level here at 2086. If I can break that with good volume, and actually, I'll be honest with you, it's not even that. It needs to break here, 2100. If it breaks at 2100 level with a lot of strong movement, that's when I'm going to get back into the S fund. Currently, I'm still in the G fund. I'm not going to lie to you. And the reason I'm in the G fund is I need to know if I am currently looking at a pullback with this movement here, and this as the primary movement, and this as the pullback movement. And is there going to be a pullback up to here and then a continuation down? If that happens, this is the only thing I'm worried about. Am I going to have an M pattern? Essentially, that's what I'm looking for. Is that an M pattern that's going to form? So this would be the first part of it, going up, coming down, going up. Am I going to have a coming down moment? So one thing I can do to answer that question now is, let's see what the fibs say. So currently, this was the start of my move. This would qualify as a strong movement up, very strong movement up. And the reason is it only came down to the, here we go, the 382. Essentially, I'm going to give it that because it did hit right here, and nothing is laser specific. It's always areas, right? So it did come down to 382, and that would make it a good continuation up. Once again, I'm just waiting for confirmation. Currently, I am working on the assumption that this is a slight pullback, and my bias is because there is an election year, and we need to have a bullish election year. So things happen for good people, bad people, everybody. It doesn't matter to me. I just want to make sure I don't lose any money. I'm still currently in a sell, but here's something you can do if you're like, I'm not really sure about the strength of the move. Turn on the Hikadashi candles. Now with this will qualify as a pullback, and this could be our continuation. I would look at the DJI just to make sure. So the reason I'm looking at DJI is because this will give me volume. All right. And it's still matching this. So at this point, I'm pretty confident it's going to go past that 2100 level that we're looking at, and we're going to get that movement up. I do have a bounce here. This is usually what I would look for as a good indicator that this is going to go back up again. So right now, I'm still bullish on this. We had a pullback. It wasn't very big. And what the other thing that goes with this is the SPX, or the C fund. Now in the C fund, not CX, there we go. In the C fund, we're looking at the same thing, the same movement. So here we had our 3 candles down, 3 candles up. We filled a gap here at the bottom. Now that gap was in the daily time frame. So let's look at that first before I just take it away. It was back here in February. We came down, we filled the gap, and we're moving up. All right, and here we are. I want you to look at something. So here at the C fund, we are looking at this volume. the volume is getting a little bit less. And that's in the daily. In the weekly, we still got some good, strong volume here. It's decreasing, but it's not lower than the selling volume we had. So that is giving me a lot of good feelings right now. I'm very happy with this C fund. So if I turn on my Hikinashi candles, all right, we're not in that downtrend anymore. We're still in that uptrend. And the only thing for me is I'm still in the sell zone. This is my last confirmation. Same thing with the S fund. I'm waiting for it to break that 5260, and it's got to have some strong volume. So most likely this week I'll be getting out of the G fund and going back into the C and the S fund. But hey, for me, I don't have a problem waiting. I learned how to wait for the win. So I'm just going to be patient. So let's look at the international fund. Now this has been in the buy zone, never got out the buy zone. I already know it. And for this particular one, look at the candles. They look very strong and blocky. You don't have a lot of tail in this current week. So that is telling me that it's most likely going to go above. And look what it already did. It went above. It's past that one point, which was the last high, and that was 80.13. It's at 80.34. Of course, our next area of resistance is going to be 82.17 for the international fund, aka the I fund. So that was easy. If we turn on our indicator, you'll notice that right up here is where our next area of resistance is going to be, 82.17. And we're going to take a look at the bond fund. So if you're interested in the F fund, the aggregate bond fund, here you are. We are doing a downward movement. Still in the sell zone. Still in the sell zone. We have rejection off of the 96.49 area. I'm looking for the same thing, continuation. Now with the bond fund is different because this is going to be based off of the interest rates. So if we have interest rates that are higher for longer, you know what I'm saying, this should start going back up. Only thing I want to know is for the bond fund specifically, if it breaks here, this 96.87. 96.87. The reason I'm looking for that is it is a direct correlation with the 14-day moving average. A lot of times you'll notice when you're looking at a stock or you're looking at futures or you're looking at Forex or options, it doesn't matter what you're tracking. If it has a chart and you put a 14-day moving average on it, watch how price reacts when it hits that 14-day moving average. A lot of times there are automatically orders there waiting. Then they have to get filled. So if the orders here at 96.89 are all buy orders, we're most likely going to see a very fast move up, and we're most likely going to see it here to 97.34 to 97.53 or 54. That area there is probably going to be our next area where we're going to have a lot of movement, and we're probably going to change from a sell zone into a buy zone, but I have to wait. Why? I'm waiting for the win. I'm not rushing for the lose. Okay. So that was Stock Shots for this week, our TSP. And once again, sorry for last week, but life happens. And I do want to say thank you to Dave Charts. So I appreciate you, man, for reaching out and letting me know about the videos last week. I'll put a link in the description to Dave Charts. If you have not heard of him, he's another really good TSP analyzer. So once again, Dave Charts, thanks a lot. I appreciate you, my man. And we gotta link up and do that video together, man. All right. So thanks a lot, everybody. I'll see you next week.